My guest today has held senior level go-to-market leadership roles at companies including Microsoft, Accenture, Adobe, Salesfiy, and now Emplifi. Over the years, we've been lucky enough to support his win-loss program efforts, and no matter the company, there are always two pillars to his go-to-market strategy: understand the customer way better than anyone else, and understand the competition better than they understand you. Vijay Gupta is the Chief Growth Officer at Emplifi. He possesses exceptional strategic skills, and what truly captivates me about his perspective on win-loss research is his emphasis on embracing change from the very beginning. And I couldn't think of a better way to kick off Season 3 of Blindspots than with Vijay. I'm your host, Ryan Sorley, Vice President of Win-Loss at Clue and founder of Double Check Research. And it is my pleasure to share with you the Season 3 premiere of Blindspots with my guest and friend, Vijay Gupta, powered by the Compete Network. Vijay, it's so good to see you. Thank you so much for taking the time to connect with us today on this episode of Blindspots. We've known each other for quite a long time, working together at various companies, so we feel really honored and privileged to have you be here today. So thanks so much.
And thank you for having me. I mean, it's so great to see you again, and so great to get a chance to talk to you about all things win-loss. I believe that's what we're going to do
That's
over
right.
the next few minutes. So.
And before we get started, about how many lanyards do you have hanging off the back of that chair? Have you counted recently?
I have not counted, but these are lanyards where, at events where I was a speaker. But I would guess maybe 30 or something, maybe more than that. But I've never counted. It's a good thing. I should ask my 4-year-old son to count it. That'll, help him.
That's right.
Keep engaged as well as help him with his counting skills. So.
Hey, well, thanks. Given your career and your role as a chief strategy officer and your always interest in win-loss research, I'd love to hear from you a little bit about your relationship with win-loss information, and as you work with leadership teams within the organizations that you've been part of and board meetings. How does win-loss? What's your relationship with win-loss? How does it fit into your life?
Sure. So I have throughout my career have been lucky enough to have go-to-market leadership roles in companies such as, Microsoft, Accenture, Adobe, Salesfiy, and now at Emplifi. And when I think about a go-to-market strategy, two of the key pillars of that strategy is, number one, to understand the customer way better than anyone else does. And the second part is to understand the competition way better than the competition understands you. And the reason I bring those two pillars up, Ryan, is because when we think about win-loss, it's not the analysis or the interview or the information that's coming in. What you're trying to glean from that is, what is it that I now understand about my customers more than what I did before? And what is it that I understand about my competition more than what I did before? And when I talk about understanding customers, what we are talking about are things like, why do they buy? What do they buy? If they buy, who do they buy from? What did they like in the process? What were the things that they are telling us that we should be better at? And paying attention to that. And at the same time, when I'm talking about competition, it's less about focusing on individual competitors, and it's more about understanding what are the options that the competition is offering to the prospect or the customer or the client, which we can learn from, which we can, in some cases shamelessly copy and just get better than them. And also, when I talk about competition, I don't only mean competition in terms of other companies that you're competing with. It's also the competition that comes from internal friction within a prospect or client, or the internal inertia to not do anything. Because sometimes in win-loss interviews that comes out, that they chose not to do anything. And then you realize that your real competition was not some other vendor or some other software company. It was the client themselves and their desire to maintain status quo. So when you do win-loss analysis and when you think about GTM strategy, I think the win-loss analysis becomes a very critical input into helping companies get way better at understanding customers as well as way better at understanding competition. And that makes them stronger. That makes them more informed. That makes them a lot more focused on things that matter to the market, and makes them stronger in the medium and long run.
I love how you broke that out so clearly. When we talk about win-loss, there's business drivers, selection criteria, product feedback, pricing, sales execution, and then competition's in there. But what I heard from you is that you kind of separate the two to a certain degree and hold that kind of in a slightly different lens, which is really fascinating. And it's funny. I was having a conversation recently with a program owner that actually at another company, and he was mentioning to me that they get their goal is not like super rich with the competitive intelligence. It's more about that customer experience side. While other organizations, like, they want as much competitive intelligence as possible. So it's turning these knobs. Like, well, what is it that's special about your program, and why is it special now? Like, and will it change in the future? Will your focus change? So have you seen more of kind of a consistent approach to win-loss, where you're looking at collecting the same data quarter over quarter and kind of comparing and contrasting over time? Or are you more, focused on more of an agile program that might be changing focus over time based on maybe what you learned in the previous research period? So how do you think about that piece?
It's a great angle in terms of looking at it from the perspective of keeping it consistent or keeping it more flexible. And what I have noticed and what I have worked with in the past is an approach where when you launch a win-loss analysis program, you spend enough time in structuring it to cover parts that you really want to cover and that are important for your business. And again, I'll go back to in terms of understanding the customer and in terms of understanding the competition, and then being open to make minor tweaks. And the reason I'm saying that is because one of the things that I have found useful through win-loss analysis is the trending of topics, trending of insights in terms of why we are winning, why we are losing, what's the competition doing, how's the buying process. And if those things are not consistent, it's very difficult to put the information that's coming out from win-loss in context, because in many times the answers that you want to get to in terms of actions that you want to take might not be an absolute. So for example, you can have an absolute like, I want to improve my win rate by 5%, and I'm just making it up right now, but that can be an absolute target, and that's essential that you're kind of putting a target like that. But when you work backwards from there, you might realize that some of the changes might not be measurable in absolutes, like how the salespersons were very effective, how the customer liked to engage or the prospect liked to engage with the salesperson. It's very difficult to put a number to that.
Right.
But what you want is, at an aggregate, you want more customers to say that whether you won the deal or you lost the deal, they had a great experience engaging with you. You want to kind of trend, you want to see the trend either moving up or remaining consistent, not get worse, in terms of customers saying, they have loved engaging with the sales team and the demo was good, etc. So fundamentally, where the value that I have found is being able to then structure it that way, where you are getting the insights which are not necessarily always absolute, but they are showing you the trends. In which case, I have personally always inclined towards keeping it as consistent as possible so that you can get enough data points to look at the trends, while being open to making tweaks. So an example I'll give you from one of my previous experiences of doing this was, as we heard more comments about what the customers were looking for in the solution that we were not providing, we started to make those questions a lot more pointed so that we can understand what exactly is it that we are not doing that someone else is doing. And those questions came from the product team as a part of the interview that was conducted for the win-loss. So that kind of allowed us to make the tweak, but we did not change the full structure of the win-loss analysis, the questions, the sections, the way we were collecting the data. So I am if there are two camps, I am in the camp of keeping it consistent by starting with a thoughtful approach and making minor tweaks as you go along the way. Okay. One exception to this has been in my career where if the company that you're working for, and this has happened multiple times in my career, acquires another company and you have another product set to work on. In that case, you go back and relook at the entire, win-loss questionnaire and the structure and figure out how do you incorporate the new offering without elongating the overall conversation, because you still want to be respectful of someone's time. So those are some of the thoughts that come to mind, and hopefully that kind of resonates with a lot of the work that you have done in the space in terms of how other executives approach this.
Yeah, it's almost like a pyramid for us, and if it was a 3-level pyramid, 3 tiers, the top tier would be the one that kind of switches quarter over quarter as needs change, but the bottom 2 stay consistent, so you're able to see that trend analysis, but then test new hypotheses at the same time. So yeah, that totally aligns to how we think about it. When you think about scale for win-loss programs, so you've worked for some really large companies over the years and thousands, tens of thousands of transactions. Like, how do you look at win-loss at scale? Do you think that there's a place for online surveys in kind of a win-loss program? Are you more apt to lean into maybe a smaller sample size of interviews? Do you feel like they're both as reliable, or that one's more reliable or invaluable than the other? What is your view on that?
So having tried all of those, working with you, Ryan, in the past, having tried all of those, then my observation has been that it depends on the customer set that you are working with or the prospect set. Instead of me making the decision what will work, what I have found useful is to go to market with both the options and see what the customer, the prospect set is responding with, or what they are reacting to better. Because what I've found is it's not a function of the size of the organization. It's more of a function of the customers that you're working with or the prospects that you are targeting, and how much they are open to reacting to providing you with the right feedback. Especially if it's a loss, because if it's a loss, they have no reason to spend time to explain to you. So especially if it's a loss, are they open to it? So I haven't seen a correlation with the size of a company in terms of scale, because we have tried surveys and interviews in smaller companies as well as surveys and interviews in larger companies. I haven't kind of found specific correlation. Now, having said that, I think purely by the structure of a interview-based mechanism, it's very difficult to scale, because the number of hours that you can do an interview, number of people that you can put on the ground to do that, even if you have external help. So there is, within an interview-based process and a survey-based process, I think there is an inherent level built in terms of where the interview-based process might not scale, which essentially means that you have to be selective about the kind of target customers that you want to interview for win or loss, while the rest you go with surveys. And we have also targeted surveys which are longer, shorter, etc. So you can always do A/B testing to figure out what kind of resonates with customers. But it's usually a combination of two. Is what I have found useful, rather than rely on one or the other.
Okay, awesome. Yeah, that's consistent with our experience as well. I think that there's only so many people you can interview, and there's only so many interviews you can review, right? But if you have this long tail of opportunities, collecting some intelligence from them is a lot of people lean into that. I think the challenge, however, with surveys, you could argue is, how the question is written. Is it really super clear to the person responding? Is there survey fatigue going on? Did they just press, the 5 button
I
all the
but
way
yeah.
down because they just wanted to get through to the end? So yeah, it's something that we're exploring, and we do a combination of both today, but always curious for a perspective on that. When you think about your roles in the boardroom, like if you were to take me into a boardroom meeting that's maybe a quarterly meeting with investors, and you're being asked to report out on go-to-market activity, how do you leverage win-loss in those types of situations, and what type of response do you typically get if you leverage it, of course,
Sure.
in the boardroom? Yeah.
Sure. So in one of the companies I worked with, the CEO very regularly used win-loss analysis in their board presentations. And typically what he chose to use was to give an indication of how that company was doing vis-a-vis other competition, and how the customer sentiment was evolving based on what they were buying and what they were saying they want to buy. So based and this is something that you're very familiar with when you end up doing a very detailed win-loss interview with a lot of rich information, synthesizing that into from a board's perspective, that they can understand more details around specific customer pain points for the software category where that company is operating in, and specific competitive pressure. So not in general, we are seeing competition from 3 companies in this particular region. That's not very useful. But if you go down to the level of detail of in 20 deals that we evaluated or we did win-loss analysis of, we found in 13 it was competitor A, in 15 it was competitor A and B. That starts to paint a lot more data-driven and informed picture about the intensity. Same on the customer side. Instead of generally saying, oh, customers are worried about price, or customers are not happy with our pricing, if you go to a level of detail where you say customers find our pricing complex to understand, which by the way was one of the findings in one of the win-loss analysis that we ran. So then the question that board will ask is, what's the complexity? And then you will say the complexity was that we have too many scalars in the pricing, and that causes challenge for customers, because we're asking them to figure out things about their business which most likely is not what they're looking at every day. So we're asking for metrics that they don't either have an ability to measure or don't have an ability to even guesstimate, and we have based our pricing on that. So that causes a friction, and that causes multiple to and fro conversations, email exchanges, etc. Yeah. So that kind of specificity provides a lot of richness to conversations in board meetings around, here is the specifics that we are facing. Now, the thing with a board meeting is that you cannot just highlight what is happening. You have to then say, what are you doing on the back of that? Yeah. So if it's a pricing thing, you say we are looking at simplifying pricing. If it is, we are seeing additional competition here, you will say, what, we are going to look at how do we do a competitive takeout in those particular regions for that particular customer segment, etc. So you start to kind of not only use the win-loss as informational for the board, but also executional in terms of, here is what we are doing, and why we are doing it is because of this. Here is what we found.
Yeah, that's fascinating, and it aligns well to my own personal board experience, where you're presenting the data, right, and you're saying, okay, here are the challenges that we're having. Here's our action plan, but then you're also on the hook to come back to the board next quarter to show them the results that have ensued as a result of the actions that you're taking. So there's a real accountability measure there, which is quite awesome. So I guess if you were to think about that, like, okay, so pricing is confusing, we have to change something. Like, what typically happens next? Like, are the functional leaders the people who own those actions and are ultimately responsible for managing any sort of change leading up to the next board meeting? Like what happens outside of the board meeting after that?
So I think before we get to what happens as an outcome of the board meeting, I think a lot depends on how the win-loss program is set up and how a cross-functional set of executives are already on board. Because if you start getting executives on board after you have launched the program, it's already too late because you're starting to look at data that they might not fully either understand, comprehend, trust, and then it becomes a massive issue of gaining their trust. So typically the way I have seen this work where it is more successful is when you are creating the program and you're rolling it out, you are explaining the process in details to the entire executive team up front. At that time, you are being very clear that I don't have data or output to show to you, but what I'm sharing with you is the robustness and the rigor of the process. And as long as you trust the process, you will start to trust the outcome. So that creates the foundation so that when the win-loss analysis throws either surprising findings or it ratifies what already everyone knew at a high level but provides a level of detail that's actionable, nobody is going back and questioning the data or questioning the finding because they believe the process. And by the way, it doesn't happen in one presentation. You have to keep reminding everyone every time that the process was robust, it's built this way, it was built based on your input. We have taken feedback from a cross-functional team even before we embarked on doing this. So when all of that is done first time as well as on a regular basis, when the outcome comes out, let's say that we need to look at simplifying our pricing, then the question becomes less of, is that the right finding, and more of, okay, who owns pricing? Is it product marketing? Is it product marketing and finance? So here is a initiative or a project that we need to kick off on simplifying the pricing. So then the person owning the pricing is essentially, responsible for driving it through in terms of, what level of simplification will be done. Is that a multi-week project? Is it a multi-month project? Is it a simple project? Is it a large project, etc.? But that project success depends on foundation that has been laid many, many months back with articulating the rigor and the robustness of the process. Yeah. So that to me is more critical. And then, depending on what the findings are, you start to hand it off to a cross-functional team. Yeah.
I love that as well. I couldn't agree with you more. Getting people to lean in up front and have some sort of sense of ownership in the program definitely helps it become stickier. And they also often will be looking for the things that they brought up, right, during that discovery process, where maybe the head of product is looking for something specific, and that helps to maybe drive the program in a certain direction. Like maybe the program has a learning objective focused on that particular product question or questions. And the output will include answers to those questions. So I love that.
So one thing I'll mention here is because we are talking about board meetings and action taken on the back of that. Not usually, I think this happens all the time. You don't get to a board meeting and get surprised about the action, correct?
Right.
So what happens is, even before the board meeting, if let's say we have a finding on pricing or we have a finding on something to do with product, because the product executive or the marketing executive has been part of the process of structuring the win-loss program, there will be a mechanism to communicate back to them their slice of the findings. So one of the things that me and my team have done in the past is, based on the overall aggregated results, we'll create a cut for the product team, we'll create a cut for the marketing team, we'll create a cut for finance or sales, and share it with them so that it's not a surprise. It's customized to them so that they're not reading things which are not relevant to their area, but reading things that are relevant to them. It does take some effort. Absolutely, it does take some effort. But that small, effort in personalizing the findings for each function gets them on board a lot more quicker. And then when in a board meeting it comes up that, hey, we need to do something in pricing, or we need to do something in terms of enabling our sales teams to have better conversations, etc., none of the executives are caught by surprise. In fact, they will quote the findings to say, based on this, we are going to be doing, taking this action, or we plan to do this. So.
Love it. Well, that's another awesome insight. And I guess I know we're just out of time here, so I'm going to wrap it up with one question, which you've already answered, but just to summarize, if you're speaking to people like you, chief strategy officers, CEOs within B2B tech companies, manufacturing companies, what advice would you give to them if they have not been involved in this type of a program before? Like, how should they get started? What are the tips that you would provide to them? Things to avoid? What sage advice would you provide to them?
Well, I don't know whether it's sage advice or not, but I can share some of the things that have worked for me, some of the things that haven't. So I think the first thing I'll say is I have not come across any executive that does not see value in win-loss analysis. Yeah. So the articulation of value is not the problem. That, hey, is it valuable or not? I think no executive will say that, oh, I don't want to do win-loss analysis. That's completely useless. Nobody says that. I think where everyone's mind is at is how deep you go, how wide you go, what do you do within that, and how do I create a system where the insights are actionable for me. I think that's where a lot of the gray area lies. And what I have found is that investing in win-loss has always been way better than investing in many of the other initiatives in terms of getting an understanding of the customer and getting an understanding of the competitor. And I keep going back to that framework because that's how we kind of think about win-loss. So if executives are on the fence in terms of shall we create a structured program and run it like a program, or shall we run it ad hoc, my first advice will be, having done both, run it ad hoc and run it in a structured way. My first advice will be that if you don't run it in a structured way, then start now. There is no better time to do that, because the ad hoc process kind of becomes a self-fulfilling prophecy where because it is ad hoc, you don't get the value. Because you don't get the value, you don't want to make it structured, properly invested program to work with. So that's number one. I think there is no better time if you don't have a structured program to start it than now. So that's number one. Number two thing is to provide the right kind of positioning of this program within the organization. Many times a win-loss program becomes one of the things that a junior PMM is doing. Yep. And wherever that happens, the value that you get from that program doesn't reach the executive suite. It's a lot more amplified in large organizations where the CEO never gets to see the win-loss analysis because there's 3 junior PMMs doing that, rather than someone at a VP level or an SVP level actually owning that as a program. So you start to kind of not get the value of it. It's less like that in smaller companies because the hierarchy is flattened, and some of that can make its way up to the executive suite. So positioning the program appropriately is very, very important. Okay, in terms of where it sits, with whom it sits, what kind of name you give to it, and how you communicate about it, what kind of mechanism you use in terms of building a cadence to communicate about competitive intel as well as win-loss, so that it's not ad hoc. It's not like, oh, when I have some time, I'll do that. I'll conduct 2 interviews and I'll send a summary out to 2 people in the company. That model doesn't work. So, and I have learned the hard way, because initially when I started to look at win-loss, we tried to optimize for bandwidth rather than for outcome. Available bandwidth rather than for outcome, which meant that essentially we ended up doing a bad job of it in terms of doing it very ad hoc and realizing that, hey, it's not working out, only to realize that it's most likely a situation where you have to invest first before you harvest. And you can't kind of build that harvesting by investing in on and off in ad hoc time commitment and ad hoc resources. Okay, so that's the other thing that I'll mention. The final thing that I'll mention in terms of what I have learned is, if win-loss analysis findings are not being actioned upon as projects that cross-functional teams are undertaking, then that win-loss analysis won't have the impact that it needs to have or that it could have in the organization. And the reason I'm calling that out that way is because anyone who owns the win-loss analysis should not think of the outcome as a report that they're delivering. They have to think of the outcome as the change that they will bring in the organization because of the finding of the win-loss analysis. So the scope of just the expanse of impact needs to be wide in terms of what the deliverable is. Then the deliverable is not a PowerPoint deck. A deliverable is a change in what was found in the org based on what the findings were. And that's a mindset unlock that does require leadership guidance as well as leadership coaching for people who are either doing it or the team that is running it, or even the executive that leads it has to think about it as a change driver rather than as another deliverable that will get created and will just get sent out, and then you hope that change will take place. It actually doesn't work that way.
That was amazing advice. I couldn't have said it better myself, and I feel like we need a part 2 episode of this because you really get it, which is amazing, and all of those points were rock solid. I think the point about the ownership of the program and not looking at it as kind of a time saver to outsource it or to use a third party for the program, but that leadership level buy-in and ownership and understanding and accountability and actionability, if that's a word, it's just so important, and you get it full stop. So I really appreciate all of the time that you spent with us today, all of the great insight. Every single word you shared was amazing. So thanks, Vijay. It was really great to spend this time with you. Thanks so much for joining.
Thanks for having me, Ryan.
All right, bye for now. The deliverable for win-loss programs is not a PowerPoint deck. It's the change you bring to the organization. I have not heard anyone encapsulate the value of win-loss analysis so concisely and eloquently. Then again, if anyone could do it, it is Vijay. A big thank you to Vijay for chatting with me today. Thank you to the Compete Network for powering this podcast. And don't forget to like, subscribe, and tell a friend about this show. I'm your host, Ryan Sorley, wishing you many wins, and we'll see you next time.